here, or you can go there if you're on a phone, or both. I won't stop you. What's up, 𝐷𝐸𝐻𝐸? What's up from Dubai? How is it over there? I heard it's a good time of year to go. Kind of look like Peter Todd. You kind of look like Peter Todd. Get out of here. Lemuel Simmons, you're Peter Todd. Temple, I don't even know what you're saying. No time. Am I Satoshi? We're all Satoshi, bro. We are all Satoshi. And in just, it seems like 15 seconds. In just 15 seconds, we will all be Satoshi with the FOMC notes. Let me reload their page. Reload. Any second now. I don't know what clock they use. We'll find out. There's my alarm for 2. There we go. Any minute now. Any minute now. What's up, guys? Welcome to the chat. You do have time to subscribe. If you do while we're live, this will roll over this little button down here, or this little counter in real time, and I'll shout you out. Any minute now. Any second. Literally any second now. If you guys find it first, let me know. Should be right there, though. I'm going to open CryptoCraft because they usually have it right away, too, like as a link. Not yet. Not yet. Come on. Full details, FOMC meeting. The description, October. Any second now. Come on, Fed. The Fed, Chairman Powell's always fashionably late. What's up, Challenge Me? How you doing, my friend? Welcome, welcome. You are now tuned in. They should be here. Should be right here. Come on. Reload one more time. I don't know. Maybe they're shutting us down. They're like, man, you're getting too much. There we go. I got it. They are live, baby. Here we go. So here's like a little thing. Let me go actually to the PDF. These can be many pages long. Last time I opened the wrong one, guys. Double check I opened the right one this time. These can be many, many pages long. And so instead of sitting here and reading 16 pages to you, which would put everyone to sleep, we like to use AI to help summarize them. So there may be mistakes, there may be errors due to the AI, but it is a great way to just condense all of this together and take out the important parts that we might be looking for. So let me fire this up. Let me tell ChatGPT. Write a summary of these recent FOMC minutes. Include all important context. Let me move this over. Important info and context that may impact the next FOMC. Okay, so here we go. We're going to start with, is this right? Is this right? Let me double check. Read it to us last time. We'll see. House music. Give me a sec. I need to get this done, and then we can put on some tunes. Let me just double check. Anybody, did I get the right one? I don't remember what I opened last time, but I was like, not correct. All right, let's start with the first section right here, right now. Developments in financial markets and open market operations. Hopefully this will have some goodies for us. It's thinking. Substantial majority backed out of the 50. I was surprised by the 50, honestly. So here we go. ChatGPT reports, or our AI assistant. The recent FOMC minutes highlighted several key developments in financial markets and their implications for future policy. All right, good start. Notably, this is why we do it. Nominal treasury yields decreased significantly, influenced by weaker than expected economic data, particularly the July employment report, and communications suggesting a potential reduction in policy restraint. This drop in yields was largely due to lower expected real yields and a decline in inflation compensation. Market sentiment has shifted, with options pricing reflecting expectations of around 100 BPS points. Interesting. Oh, by the end of the year. That makes sense. Up from 50 points previously. Future prices also indicate a notable reduction in expected rates, with a model expectation of 25 BPS cuts for the upcoming September meeting. It is this month. Though the probability of a 50 BPS cut has also risen. Internationally, several banks central banks in advanced economies, including the Bank of England and the European Central Bank, have started or continued to lower their policy rates, contributing to a slight decline in the trade-weighted US dollar index. Nice. We got 1,500 viewers now. We're pumping it up. Keep those likes coming just because I'm talking. Keep them coming. Keep subscribing. Lower the rates, contributing to a slight decline in trade-weighted US dollar index. In terms of money markets, overnight rates remained stable, but there were signs of tighter conditions in secured funding markets. Usage of the overnight reverse repurchase agreement on RRP facility fell, although this may change as Treasury bill supply fluctuates. Overall, most survey respondents did not express significant concerns about the near-term economic downturn, maintaining a relatively stable outlook for unemployment. These factors will likely influence the committee's decisions in the next meeting, with a consensus leaning towards at least some reduction in interest rates, so maybe 25 BPS. The next section we will do is the staff review of the economic situation, for the second segment. Yeah. This one's bullet pointed. All right, sure. The key segments of this section: economic growth, real GDP showed solid expansion in 2024, driven by strong consumer spending and private investment. However, the pace of job gains moderated, and while unemployment rate rose slightly to 4.2%, it remained low overall. Inflation trends: consumer price index inflation, as measured by the PCE index, was at 2.5% in July, with core inflation slightly higher at 2.6%. Recent estimates suggest a further decline to 2.2 total PCE inflation for 12 months ending in August. Core consumer price index, or CPI, inflation was recorded at 3.2. Labor market conditions showed signs of easing. Average monthly job gains declined in July and August compared to the previous quarter. The labor force participation rate increased slightly, while initial claims for employment insurance remained low, indicating stable employment conditions, despite some demographic disparities in unemployment rates. Private domestic final purchases, or PDFP, a lot of acronyms. The measure of economic momentum grew at a stronger rate than GDP in the first half of the year. This and continued to suggest, let's see this. You put up a chart that has something on it. There we go. Nice and clean chart. Continued to suggest solid growth, particularly in personal consumption expenditures and business investments. In exports and imports: after slow growth in the second quarter, real exports of goods fell in July, primarily due to declines in auto and industrial supplies. In contrast, imports remained robust, particularly for capital goods. International context: economic growth abroad was subdued, with weak manufacturing activity noted in Canada, Germany, and Mexico, while services and high-tech sectors showed relative strength. Inflation in advanced foreign economies was easing, although still above targets in some regions due to persistent services inflation. Several central banks, including the Bank of England and European Central Bank, continued to lower their policy rates as they made progress towards their inflation targets. Meanwhile, the Bank of Japan was tightening its monetary policy. It's been very interesting. These economic indicators and trends will significantly impact the FOMC's consideration for future monetary policy decisions regarding the pace of easing. Next section. I'm having trouble talking today. Maybe I always have trouble. Staff review of the financial situation. So now moving from economic outlook or economic review to financial review. Do the same again, ChatGPT. Man, these are, imagine reading all this. We are now 6 pages in to 16 pages. It's going quick though. Minutes review of the financial situation highlighted several significant trends and developments that may affect future policy decisions. Interest rate expectations. The market implied path for the federal funds rate declined notably, with futures suggesting a greater likelihood of policy easing by early 2025 compared to the July meeting. This shift was accompanied by significant drop in nominal treasury yields, especially at shorter maturities, driven by reduced inflation compensation and real yields. We know that. Market volatility increased uncertainty regarding interest rates, heightened investor concerns about potential downside risks to economic activity. This uncertainty was evident in the temporary volatility seen in August, triggered by disappointing U.S. employment data and the Bank of Japan's policy actions. Remember the JPY trade. Although borrowing costs remain elevated, there were modest declines in most credit segments. Residential mortgage rates and yields on mortgage-backed securities fell, but stayed high overall. New credit card and auto loan rates remained elevated while commercial real estate loans increased. Capital market financing was accessible for large public corporations and middle market private firms, with solid credit availability for leveraged loans. However, credit for smaller firms was moderately tight. Commercial and industrial loan balances were stable, and while credit remained accessible to most CRE borrowers, the pace of growth has slowed. Love you, Queen. Love always. Love you all, guys. Keep smashing them likes. Tap the screen. Credit quality remained solid for large firms, home mortgage borrowers, and municipalities. However, there were signs of deterioration in certain sectors, particularly CRE, where delinquency rates rose. Consumer loan delinquency rates increased moderately, although mortgage delinquency rates were at near pre-pandemic lows. Not so shabby. Not too bad over there. Where did my short stream chat go? Year, what's up? Render coin you day. We gotta get through these notes first, guys. Gotta get through these notes. You guys are over on the short stream, just so you know. Vertical. You can join us on the main one, you'd like. The broad dollar index declined, reflecting a depreciation against advanced foreign economy currencies due to narrowing interest rate difficulties. All right. Now we're going to go for the staff's economic outlook. This one's short, so it should be short. Economic growth forecast. The staff anticipated that the economy would remain solid, with real GDP growth projected to be similar to previous forecasts. However, there was an expectation of a slightly higher unemployment rate by year end. The stronger than expected GDP growth in the second quarter prompted a downward revision for the second half of the year, influenced by recent weak labor market indicators. For 2024, the overall GDP growth forecast remained largely unchanged, but the unemployment rate was expected to rise slightly. Looking ahead to 2025 and into 2027, real GDP growth was anticipated to align with the staff's estimate of potential output growth, while the unemployment rate was projected to remain stable. The outlook indicated, for labor and product markets, a shift towards a more balanced supply and demand dynamic in labor and product markets, with resource utilization expected to be less tight than in recent years. Let's go. In recent years, the staff's inflation forecast was adjusted downward, reflecting new data and expectations of a less constrained economy. Both total and core PCE inflation were predicted to decline further, with projections of reaching around 2% by 2026. Interesting. That's new. These have a lot more info than when Chairman Powell talks. He never says anything. The staff assessed the risks to economic activity as tilted to the downside. And so is Bitcoin right now. Particularly due to softening labor market indicators that could indicate slower aggregate demand growth. In terms of inflation, risks were viewed as roughly balanced, considering both progress in disinflation and the potential impact of weaker economic activity on inflation dynamics. Uncertainty assessment. The staff characterized the uncertainty surrounding their baseline projections as close to the historical average over the last 20 years. indicating a moderate level of confidence in their forecasts. Thanks. Moving on, we're getting through this quick. Participants' views on current conditions and the economic outlook. So this is going to be more of their opinion, more of how they're seeing things individually. This might be the biggest segment. This is like 6 pages out of 16. Let's see if that's too much text for GBT. Nope. And it did it pretty, okay, cool. It summarized it really well, really concisely. During the recent FOMC meeting, participants shared their projections for real GDP growth, the unemployment rate, and inflation from 24 to 27, reflecting their assessments of appropriate monetary policy. The longer run projections represented each participant's views on how these variables would stabilize under appropriate policy absent further economic shocks. The summary of economic projections was subsequently released to the public. And that's this. Inflation developments. Participants noted that while inflation remained elevated, most believed that recent monthly data had indicated a sustainable path back to the 2% target. Some highlighted the role of falling food and energy prices. I haven't noticed that, but have any of you guys noticed falling food or energy prices? I guess gas is down, whatever. Alongside a broad decline in prices across goods and services, particularly in core goods and non-housing services. Many noted that businesses reported diminished pricing power, with consumers increasingly seeking discounts. Now you're speaking my language. Participants suggested that the inflation spikes earlier in the year were likely temporary. Interesting. That's actually pretty big. That sounds dovish. Dovish to it. Outlook for inflation confidence grew among participants that inflation was moving towards 2% target. We know that. Supported by several factors, modest slowing in GDP growth due to committee's monetary policy, well-anchored inflation expectations, reduced pricing power, rising productivity, and softer global commodity prices. Take base hits, Ricardo. What are you talking about? They noted that the stable labor market conditions were unlikely to contribute to inflationary pressures. Dovish. Participants recognized that labor market conditions had eased, moving away from the overheating seen in previous years. Evidence included slowing payroll growth, a slight uptick in unemployment, and reduced job vacancies. Despite the easing, the labor market remained solid, with low layoffs and initial claims for unemployment insurance. Some businesses are adjusting to reduced hiring rather than laying off workers, indicating a cautious post-pandemic approach. Participants observed, man, I can't say this word, participants, so many times. I'm starting to lose it. Observed that the economic activity continued to grow steadily, bolstered by resilient consumer spending and rising real household incomes. However, concerns emerged about potential strains on household budgets, particularly among low and moderate income groups, which might slow consumption growth. Most participants felt that the upside risks to inflation had decreased, dovish, while downside risks to employment had increased, leading to a more balanced assessment of risks to the committee's dual mandate. There were concerns about a potential sharp slowdown in consumer spending and challenges from geopolitical developments impacting inflation. In light of inflation's progress and balanced risk assessment, participants agreed to ease monetary policy, supporting a 50 BPS reduction in the federal funds rate. They recognized the need to recalibrate policy to align with the recent inflation and labor market indicators. What's Bud yapping about, Ankish? The only thing that this stream is about right now, the FOMC minutes. Some members preferred a more gradual approach, advocating for 25 BPS instead, emphasizing a cautious approach. So it was not unanimous. I think we knew that, though. The future policy outlook highlighted that if data aligns with expectations, showing inflation trending towards 2%, the economy near maximum employment, it would be appropriate to adopt a more neutral policy stance. They stressed that recent adjustments should not be interpreted, this is important, as negative economic outlook, and future decisions could remain contingent on evolving economic conditions. Overall, they just like underscored the 2%. Let's go to the actions. We're almost done, fam. After we get through these, we are on page 13 of 16. After this, there's just the vote. We will do some charting, some trading, some chatting. We're almost done. It's weird how sometimes it's doing bullet points and then sometimes it's doing paragraphs. This one's paragraph, whatever. No, you know what? This is, do it in bullet points. Here we go. Because it was just going to rehash because it did it in paragraphs. Monetary policy discussions and actions. Activity, continued solid growth with a slowdown in job gains and a slight rise in unemployment, which remains low. Inflation progress, some progress towards the 2% target. Inflation levels still elevated. Post-meeting statement, increased confidence that inflation is sustainably moving towards the 2% target. Risks to unemployment and inflation goals seen as roughly balanced. That's a lot of repetition. We've said that a few times now. Economic outlook considered uncertain with attention to risks. Yes. We lowered the target 4 1/3 to 5%. One member voted against this, preferring a range of 5 1/4%. So I guess just one member wanted 25 BPS. Kind of made it sound like it was more than one. Commitment to closely assessing incoming data and evolving outlook when considering future rate changes. Ongoing reduction to Federal Reserve holdings and Treasury securities and agency-backed securities. Focus on 2% target. Where's the new stuff? Action directives. Federal Reserve Bank of New York directed to conduct specific open market operations. Thanks. Management of repurchase agreement operations. You were doing so good, ChatGPT. Then you just pooped the bed. In favor, Powell, Williams, Barkin, Barr, Bostic, Cook, Daly, Hammock, Jefferson, Kugler, Waller. Again, so it was just Michelle W. Bowman who preferred the smaller rate. I guess that's important because a lot of what we were kind of expecting is more of a mixed response. It just seems like there's one dissenter. That doesn't seem as important as it could have been. Lowered to 4.9. Primary credit rate reduced. We know this. Next meeting. Notation vote. Attendance. Actually, there's nothing to even do on that part. Cool. That was it. What do you guys think? What are the key takeaways? What's the big stuff? I'm not reading the comments. You are right, Ricardo, because I was reading a 16-page FOMC minute document. That was the whole point of the stream. But I'm done reading it now. We got the summary. I'm not gonna lie, while I'm like just going through it, it's hard for me to retain a lot. I'm focusing on pronouncing and communicating. But what I took away from it is a lot of dovish talk, a lot of confidence that we are going in the right direction, and considering we got an interest rate cut, the right direction is interest rate cuts, it seems. This single dissenter, not really a big deal. Pant music, we'll put on some music. Yeah. What do you guys think? I want your feedback because you got to listen to it. You're from India. Hi, Varsha. On some low chillin' vibes, tunes in the background. Let me know if the music's too loud. It's gonna be low though. You switched off? That's all right. Me too. I checked out in my brain while I was saying it. My takeaways are really, it just seems dovish. It seems like there's more cuts coming. This is like the first time that I've heard confidence in the Fed of things going in the right direction. Does that align with what you guys got from it or no? It's important. Your feedback, Randy, 80K by Halloween. I like that feedback, buddy. I like that feedback a lot. Let's make it so. I'm skeptical this won't get really loud. Well, I know. Yes, I know. There we go. I think that's good. If it's too loud, let me know. Sorry I missed you all in chat. What's up over there on the short stream? What up from Fort Worth, Texas? How you doing, Warren? What is an order block, Varsha? I have a whole free trading course. One of the videos is on order blocks. Go check it out. It's on this channel. YouTube highlights. What's up, man? Guess Orama, OG Risen. What do I feel about SoFi? I don't know, man. Alex O, how you doing, bro? Another great YouTuber here in the chat. 𝐂𝐴𝐧. When are you gonna start YouTubing, 𝐂𝐴𝐧? Good to see you, darling. No need to check the super chat. Okay, I'll check the super chats. Shout out to all our new subscribers. I see Dustin Wesley, Blend Games, Dole Anik. I see some super chats and stuff. We'll get to those. You know what? Actually, let's give away some memberships too. I don't think I've given away this month. Make sure you've opted into membership gifting. Is a little bit too loud. Make sure you've opted into them. Make sure you're subscribed. Make sure you put a message in the live chat. You've liked it. You've engaged. The more you do, the more likely you are to win them. We're going to check the super chats and then we'll give them away. What's up? Mostafa. Subscribe. Candleholic. Me too. Jackie's. Dimfo. Abdullah. Challenge me. I think I got that one earlier. A name in a language I can't pronounce. Mikkel Beckman. 𝐂𝐴𝐧. Dominic. Josie. Wakur. Insurance Health. What's up? Got a lot of new subscribers during this live. Keep them coming. There we go. Another one as I'm speaking. That number is updating in real time. Now to the super chats. Hold up. You're my what 10th subscriber, Rahul? You were? Or you are? Because we got 130,000. That's a lot more. A lot more than 10. I think we hit 10K in like 2019. No, 2020, 2019. That's weird. It only shows yours, 𝐂𝐴𝐧. Sorry you haven't been around. Tom broke up with me. I don't think that's true, darling. Then you gifted a membership. Love you, 𝐂𝐴𝐧. Good people's 𝐂𝐴𝐧. I like that lady. I like that woman. I don't see any other super chats. That's fine. Don't super chat. It's not really super chatty kind of day. What's up, 𝐂𝐫𝐫𝐾? Escapism. I see you guys coming in. All right, so a few things I wanted to look at quickly. What's up, Dean? Dane Stickles. Quickly. Let's look at the day on the corn. We've had some unfortunate candles. It's okay. It's not over. On Monday, we rejected from the 200-day. God dang. On top of the 200-day, we also rejected from a green quarter at 63.3 and a green week. We opened at the green week and we closed below. Pretty savage candle to get. Not the candle that I was hoping for or looking for. Since then, we have continued downwards. The day after, rejecting from the 20, and we are quickly approaching. What's up, pest killers? Getting that membership in. Hell yeah. Ali Ahmed, what's up? Quickly approaching the 100-day and 50-day moving averages. We have to find support here. We have to. 61K, as low as like 60.7, 60.8. We got to find support here. We can go lower intraday. We can go to 60.5 again. That's where we looked for a long earlier in the month. Can hit support there again. Prefer that it didn't. I don't want to see it tested. I want to see a higher low, and I want to see the this price move right back to that 200-day. Remember, we were looking at the consecutive rejections of this moving average, this massive, almost year-long average of price. We rejected once, twice, 3 times, now 4 times. The good news, each time we test this, we weaken it. Every time you test resistance, it's weakened. Every time you test support, it's weakened. So it is weakening. And on a next approach, the probability of breaking it will be higher. This is exceptionally true if we can continue to paint higher lows, which we have done in August, into September, and now potentially here in October. So trading above 59.9 is still in this pattern, is still looking good, and my bets are still a test to the top of our channel, our high trend here, putting us around, let's say 68 to like 71K. That's still where I'm at. If we lose our support from October and see lower lows over the next few weeks, things don't look quite as pretty. So we're going to add our fib tool here to our October low to our October high. And I don't like where this puts us. Our 1618 down at 57K, that would be a lower low, at least first middle of September's low. It would be a retest of this support, which I wouldn't be a huge fan of. Our measured move down at 55.5. These would be decent downside targets. The most important thing on my mind for this chart that is keeping me bullish, other than the fact that I'm always bullish, baby, is right here. Let's see. We have a range low to a lower high. That lower high brought us to a lower low in September. September into the end of September, we then broke that high. And while this isn't the first higher high, you can see back here in June, we did trade higher. That's a higher high. It is the first higher high after a higher low. We have not had that happen. That's the important part. As long as we don't trade lower than September, lower than 52.6, we still have another higher low. That could be in that 57 range. That could even be as low as what I forget we were looking at on the month. Like 50, was it 57, 54? I don't know. Could be anywhere above September's low. And then what we'd want to see is obviously a move back to the 200, a higher high, break the 200, hold it as support and continue up. That's what I'd like to see. This all kind of gets thrown out if we trade below September's low. So that's where my eye is definitely fixed. Absolutely. While we do have horizontal supports on the way down, we also have other shorter moving averages, like the 50 and 100 right below us, and they are likely to provide support, in my opinion. I think we are likely to see a bounce. There are a few other things kind of impacting this chart. The dollar, the Dixie. Last week closed a monstrous candle for the Dixie. That candle brought it directly back to previous support from March of this year and closed below. I was hoping for a rejection, but this week has now moved higher. It has broken past 102.74 and, in my opinion, looking to move back to 104.1. This is a more major, longer term support that we saw hold all the way from March until July of this year before it broke down, bringing us lower than December's low and putting 99.5 in sights. What I would like to see there is a rejection from 104.1 and a move lower. That's what I'd like to see. We'll find out. But this is likely putting downside pressure on markets, which is almost hard to believe when you take a look at S&P. S&P at new all-time highs again today. Someday Bitcoin. It's weird. Bitcoin used to be at all-time highs on stocks. Now stocks at all-time high. Bitcoin kind of being that special friend sitting in the corner. That's okay. I still believe in you. Trading up to 576 on SPY. Looking. Let's see. Looking for, what are we looking for? Boom. I'm going to give away those memberships soon. I guess 600, good upside target, 620. I think if we zoom out, we get some, more macro extensions. Here we are. Here we are. From 22 all the way to the end of 22, the decline in S&P using our fib tool gave us a target of 561, which again seemed to play pretty meaningfully. We went to 565 before retracing, tested it again. Remember, this horizontal did not exist until we put the fib. This is a fib line. This is not a horizontal support or resistance. Higher low, broke, and now into price discovery again. So since we've successfully tested it as resistance and broke, well, it didn't really test as support. Logically, I'm looking for the measured move target up here. Our more local move also gives us that range, and that's some confluence for me. So let's say into the end of the year, I think SPY hits 600 and maybe higher. It's going to be a spicy end of year. This is just a crazy chart, man. Stocks like only go up when they're going up. Like they just go in channels up and then they fall down for periods, and they just seem to reform these channels. Volatility is lower, but man, I could sleep better at night if this is how Bitcoin looked all the time. Let's see the damage here. Our red candle here on the corn, while it's not really that big, fraction of a percent, does seem to have started at the exact moment those notes were released. Does that mean that it is bearish for Bitcoin? What was in the notes? I don't think so. Bitcoin just tends to have volatility whenever something big happens, whether it's good or bad. It doesn't really seem to matter. Often you'll see it move in the opposite direction of where it ends up going initially. Let's see. Now we're rolled over. How's that 4 looking still? Not as good, man. Not nearly as good. What's up, Professor Beans? Just going to the vet today to get booty medicine. Past the 1618, 1615 would be like nice to close in this intraday, or in this, basically in this stream. Be a nice close. Retake that support. What's up, Joey Trump? T. Aiden. This is a super chat. RSK Nor. What's up, man? Good to see you. Good to have you here. On the main stream, because I don't think I can give them out on the short stream. Did the hurricane news affect markets? I don't think so. I don't believe so. I don't think I can give them out on the short stream, but I'm about to give out 5 memberships if it'll let me. Yep. To the mainstream chat. To the big resolution, not the vertical, not the thin one. There's 5. I hope you win. Arpad, you won. Dude Tang, Frank Stern, what's up, bros? Made 40K in the last FOMC. Nice, Bearson, kid. Well done. Trade Intuition. What's up, bro? Another YouTuber. Got all of them. On Biceft. Congrats, fam. Use those emojis. Enjoy them. Emoji them up. Love from the UK. Love back to the UK. South A live trading. What's up, man? Fade and TradFi. Please check Fontum, says our fan. We can. We can do that. And Bitcoin hit 60K? Yeah, of course it can. What's up, Stefan? Let's see. We can do some requests. We did a lot of requests on Monday. We're not going to do a bajillion today. I said that last time, but this time I'm serious. My voice was so wrecked I couldn't do voiceovers after. So I gotta be careful. When Lambo in our hearts right now with our friends. That's right. Intrax, where am I from? From a poor family. He's just a poor boy from a poor family. Total crypto market cap, I'm liking it. I pointed this out Monday, still liking it. Looks like we filled that monthly candle from last month with the red. Found a little support, bouncing back up. I think that's a good sign for the overall crypto market. Continues to be the same. I wanted to show you guys TRX, because I want to say like a month ago, let's see, back in August, September, I was talking about TRX. It was pumping, it was rallying, while everything else was not really doing much. Caught my eye. It has retraced since that. Didn't quite come back to our support targets at 14.5 cents. Seems like maybe 15 cents strikes again. But over the last 2 days, TRX has come back up to 16.2 cents, reapproaching with a very healthy, very strong higher low here. Reapproaching its yearly high at 16.9 cents. Breaking past that level can place TRX back to its 21 high at 18.4 cents. I think that's very likely. What happens there? I don't know. We'll find out together. If you reject, maybe you see a larger retracement of this move, right? Maybe to 10, something like that. But all-time highs are on the table. I'm skeptical to say that because we haven't seen any coins from this time period really move meaningfully back to all-time high. I guess that changed. I don't know why that wasn't on. 35 cents. I have not seen other coins do that. Maybe TRX will lead the way. Maybe it'll just get us excited and dump, right? Who knows? I don't. But I'm going to be watching it. I think there's a good trade here, and I think that trade, at least for now, is still to the upside. Okay, that's the only chart actually I pulled up. Do you get any alerts that are spicy? SPY, Dixie, Cass. Cass is hurting. Red t-shirts for the Bears? Ain't no bear. Don't smoke, bro. I love you. Love you too. Come to Dubai. I may be there next month. We'll find out. Projection for end of October. Let me see. It would not surprise me to see 59,000 in October. Last month's open. We've seen it every month, the months before. But it's not guaranteed. If we're going to break this pattern, if we're going to move to the upside, that would be a pretty Bitcoin way to do it. Projections for October. I'm thinking because I don't have like a great answer. Swing low. Say 70. I think we see 70 in October. Could be at the end of October. Could be tomorrow. Who knows? That's my opinion. I don't know the future. I don't have a crystal ball. Suey. Yeah, we can update Suey. Suey did hit $2 completely and utterly. Looking for a long on Suey potentially at 155.9 if it comes. Suey did on Monday retest the all-time high. It was, I mean, like a penny off, close enough. Meaningfully tested it. Finding support. It's looking to find support. Looking to find bids. I think there's scalp plays available here. But, man, I know people are starting to think like, oh, new all-time highs. And like, man, without Bitcoin, without the market trending up, I don't think a new all-time high will continue, let's say, until the entire, like the rest of the market is uptrending. Maybe you break all-time high and you kind of sweep liquidity, and maybe you come down to one of these support targets we have. 155, 125. I mean, that'd be awesome to see $1 again. We'll see. If Bitcoin breaks its low in August, I have very little hope that we'll see alts rip to new all-time highs. At least in the short term. I'm not saying ever. This is like in the near future. How about Doge? I forgot to look at Doge on Monday as well, so I'll pull it up quick. Overall analysis on total market cap, KJ. Total market cap looks healthier than Bitcoin at the moment. That could actually be a suggestion that Bitcoin dominance may be looking to slow down its momentum, maybe looking to reverse. We'll see. Found support at 2 trillion. That's a great spot to find support. I think this is going to look to retest this yearly high. Maybe not this month. Maybe this month. I think total looks good. Looks healthy. All right, let's look at Doge quick. Long on Doge. Rejected the 200 weekly moving average. Not really what you want to see. I'd say if Doge trades below 8.8 cents, I'd probably look to wrap up my longs. On a more macro, and God forbid ignoring the 200 week here on Doge, you look good. Like, this looks good. You have higher highs, higher lows, higher high. You still technically held that low from the yearly open. Gotta see Doge make one of those big boner candles. Break past the 20 cents it hit earlier this year, and look to really deal with this big boss resistance above. All of Doge's resistance, in my opinion, sits right here between 20 and 25, 26 cents. Right here. If it can retake this level, I don't think a new all-time high will be an issue for it. But, one step at a time, boys. That was a 200 week, right? Yeah, this is a 200 week. Spooky. Spooky, spooky. You can do it, Doge. Boner candle, that's right. That is right. Guys, if you haven't yet, you should definitely join the Discord, discord.gg/TomCrown. In the video description, there are links. There are affiliate links. If you sign up with any of them, you will get into our private, exclusive trade group in Discord. It costs you nothing. It's the only way in. Make sure you like and subscribe. You know the deal. You know the deal. Keep it going. What about the other dog? What about Whiff? We did look at Whiff on Monday. Maybe these shorter kind of analyses are better, I think. At least for me right now. On Monday, rejected from resistance. Man, let's go. We were spot on with this one. Rejected from resistance, potentially looking for support down at $2. It would be ideal for Whiff to hit a higher low. If it fills our long, probably just looking back to 273, something like that. Yeah. Yeah. What's up, Travis? Aaron. Dahan Shri, Noob444, MPQ, MPR printers, CMCZ, ZZ. A name in another language I can't pronounce. What's up, my guy? Welcome. Joey Trump, TL. Then we got a lot of good names here. I don't know how many subscribers we got today. A few hundred. We're live here Monday, Wednesday, and Friday at 1 p.m. East, covering all the charts in crypto. Usually we do more charting, more trading, but today was our FOMC minutes, and we love covering that. We're gonna be live again on Friday for more spice. We'll probably do a little degenerate trading on Friday. You should tune in. And let's see, it's 2:44. We've been live an hour and a half ish. I gotta do some voiceovers or I'll never get them done. If I keep going, I'm never gonna get them done. We're never gonna have any more free trading lessons, and that's not a world I can live in. So guys, subscribe, sign up with the links in the video description below, join the Discord, and I'll see you guys Friday. Thanks for tuning in. Keep a lookout for our next streams, our next content. We just published a video on confluence and scalping strategy. Check that out. It's doing well. And I love you, fam. Stay safe. Send your prayers out to those in Florida suffering from hurricanes. I will catch you guys soon. Crown out. Oh no. Oh no. I didn't forward them. Oh well. Oh wait, I can't. What am I talking about? Peace.